If you believe that the future of economies will be agentic, we are building the Stripe for the agentic economy.
Hey everyone, welcome to the Level Up Podcast, presented by the Medici Network, the exclusive community for financial institutions to engage with blockchain-native funds and founders. I'm your host, David Breiter.
And I'm your host, Sean Farrell. Before we kick things off, make sure to hit the subscribe button and follow us on Twitter for the latest episodes.
This podcast is for informational purposes only, and nothing herein should be considered financial, legal, tax, or investment advice. The views expressed by our hosts and guests are their own and do not reflect those of the Medici Network, Fundstrat Global Advisors LLC, Finality CP Management LLC, or their respective affiliates. All listeners should consult their own professional advisors as to the legal, tax, financial, or other matters before making any investment decision.
Now, let's get into it.
Hey everyone, welcome back to Level Up. David and I are excited to be chatting with Jansen Teng, the CEO and co-founder of Virtuals Protocol. Virtuals, they are a project building at the intersection of crypto and artificial intelligence. David, why don't you kick us off by running us through some of these token details?
So Virtuals Protocol with a very innovative ticker, Virtual, VIRTUAL.
It's a long ticker.
That's right. It is a longer one. But easy to remember if you know the name of the protocol. Trades about $1 at the time of recording. And that's about a 630 million market cap, give or take. And, as Sean mentioned, it's kind of an AI blockchain project. And, there's some comps, but, we'll loosely use, decentralized AI in the comp set. BitTensor is one, AI comp, or Fetch AI, people think about it. Maybe think about it too, like some of their launch protocols, like a pump fund. And, the token really is, one that, has had some traction in the past. It's ebbed and flowed in terms of the adoption. But, at the end of the day, what they're doing is they're trying to, incorporate, and they're attacking the, this UX layer of the stack with AI agents. And, agents obviously can be useful for, a number of tasks and making everyone more productive and efficient. And, Sean, they're trying to do, something for, connecting this infra of AI with blockchain. I think there's a thesis around that people are trying to see if it plays out, and we'll see if it does. But Sean, tell us a little bit about some of their product suites.
Yeah, so Virtuals, they offer, two big things. One is their agent ecosystem. Within that, they have their tokenization platform. David mentioned earlier how we have Pump as one of their comps, and that's because most of the traction they've had since inception has been really as a launchpad for different agents. And the way they make it seamless for folks to launch their own customized agents on their platform is via their game framework. You can think of this as like a software development kit, but for developing agents. And then alongside that, they are developing their agent commerce protocol. And this, I think, is the big growth vector for them, given the fact that I imagine there's some finite amount of agents that, will be launched on the platform. They're building towards a world in which all of these different agents are able to, communicate and transact with one another on behalf of the end user. And, they want to be at the center. They want to be that connective tissue between those different agents. And, the protocol that they are developing, as that connective tissue is called the Agent Commerce Protocol, or ACP. It's this communication standard for agents, basically.
So it sounds kind of like they're really trying to own the process, maybe from end to end of, launching, financing your agent, launching the agent itself from the tech standpoint, the integrations, and then creating an economy around that. And, on the first part, on the tokenization platform, really just gives people who want to build agents, who want to finance agents, the ability to launch a token around that agent. And, historically, some of those tokens have been more, what you could call meme related, meaning maybe not a ton of actual value tied to the agent, or some value, maybe some have value tied to the actual utility of the agent. But that process really has involved, locking up some virtuals, creating the agents, finding, creating liquidity against that pair. And the other component of that where virtuals collects value from that process is, they have this, they call it an anti-sniper tax. Really, it's just to kind of make the issuance of these, hopefully be more fair and orderly. And declines over time to a steady state, take rate of about 1% of the supply gets taken from these new agents that are launched. And that gets split, between the creators and the protocol. And that's maybe one interesting way that the protocol can collect some value for the ecosystem. Sean, tell us a little bit about the game framework.
Yeah, so the game framework, or the generative autonomous multimodal entities framework, I think I'm just going to use game, is like I mentioned before, it's the modular framework, the development kit, I think, is a simplified way to think about it, that provides folks with preset tools to create their agents and ultimately launch them. They have different different helper modules, different ready integrations with different out of the box plugins. One very popular integration is their X API, which I think we've seen a lot of these virtual agents plug into, and have their agents send out automated tweets. Like you mentioned, the utility of these agents certainly varies from just a Twitter bot to agents that look to optimize for yield solutions.
So stepping back in the process, you financed your agent, you've gotten some liquidity, there's some trading, and hopefully you've created something now with this game framework that's, can go out into the world, do something either, at least entertaining, maybe on Twitter, or hopefully useful. And going from there, I think the last step is just, hopefully the utility of that agent can create, some agentic commerce. And this is kind of what the name of it is, the agentic commerce protocol. And I think Virtuals hopes to, capture value on this final stage of the life cycle of these agents, which is, you have, hopefully protocols being used, agents being used in the public domain that are useful and can create value and want to interact with other agents and, end users. And there can be value that can flow through the ecosystem. And, I think that, you need these in an agentic world, you're going to need these different agents to be able to communicate. So you'll need some communication standard. I think that's what this hopes to be. And, that's how Virtuals hopes to collect, value on this. Sean, is there anything else you want to add here?
No, I think that's right. I mean, if you want to think about like an example, a real world example, I think it's, maybe you have a primary assistant agent and you task them with, hey, I want to book a trip to X place, and they communicate with, a travel agent, but, virtual travel agent that is specialized in booking travel, and the commerce is facilitated through that agent. But obviously there needs to be funds that are transferred from your wallet to your personal assistant agent to the travel agent, and obviously some kind of receipt remitted back. And I think that's kind of, they want to be that protocol that facilitates that. And like you said, I think ultimately that's probably where they want to capture most of their value.
Yeah, I think, there has been some stats that seems, encouraging here on this front. Here's a couple metrics we've pulled from one of their dashboards. And, they give you, a few things from, what they call XGDP. I'd imagine that's kind of transactions, between protocols of value, but it could also be some trading volume too. We'll have to ask about that. And then also number of jobs. And I'm curious what some of those jobs really entail, but number of jobs have been growing as well.
Probably
And
a lot of
then
tweets.
I would imagine that. We know, one thing about digital asset ecosystem is very intertied with Twitter. And then some communication between them, and then wallets has been growing as well. And we've just listed a couple of the top agents here by these metrics below. And then the other thing that's interesting is just the Virtuals market cap. So, we mentioned there's these tokenization of these agents. They have, almost like little companies on top of the, Virtuals economy. You have about 400 million of an AI agent market cap built on Virtuals. Now, predominantly that's held mostly within Tibber, which is Roboti. And, I think, kind of an interesting backstory on this one. It's, I think the lore in the, back to the Twitter or the CT community is that this is launched by Ribbit Capital, and they're the backers behind it. And that's kind of what's propelled, the excitement around the token, and we'll see if that's true. And talk to people about that. But that is
If
the
anybody
largest.
from Ribbit Capital is listening to this, please confirm or deny.
Just wink twice, and we'll see if that's true. But there's some other projects as well driving value, and that's a decent amount of value. And now here, Sean, we're looking at the TVL, or the value in the agents trading pools, because obviously if you have a token or an agent token, it's going to have to trade against something, and just like Apple or Nvidia will trade against the US dollar, in the virtual economy, virtual agents will trade, like take Tibber again for an example. The Tibber token will trade against the VIRTUL token as kind of the base currency. And I think, there's about 23 or $24 million of liquidity, as against those trading pairs. And I think this is maybe one way that, the protocol seeks to have, you could almost call it some type of monetary value or payment means for goods and services value here within the protocol. And that's one of their economic functions. And then talk to us about some of the revenue, Sean.
Yeah, so I think we might have mentioned it earlier, but one of the revenue sources is via this trading fee. I think the prior slide called it a tax, but steady state is 1%, absent any outsized fees, post launch, that anti-sniper mechanism. And like we mentioned, part of that goes to the treasury. So 30% of those fees go to the treasury wallet. Right now, I don't think there's any way for that value to be transferred to actual token holders, but I guess presumably, there is some kind of, call option on that pool of revenue that is routed to the treasury.
Yeah, I'd be curious, if this tax is partially, calculated in the tokens. If the big spike, I mean, 66 million is a decently large number for an emerging protocol. I would be curious though, how much value is just because, the token had a high price when it launched, and if it's still, the value that collected as revenue is still worth that much. But that's something maybe to dig into. Here we have just some data from DeFi Llama, which is the weekly fees, and across mostly on base. And you can see obviously at the height of what would be the some would say an AI craze at the end of 2024, beginning of 25, fees were pretty meaningful during the week at about 8 million, and they tapered off quite a bit over the year, but had made a decently solid rebound in November, and have trailed off again with the broader digital asset market weakness, and you could even call it a lull of activity. But Sean, tell us how these fees and all this kind of ties together to hopefully what they have in their design, hopefully trying to be some utility or value for the token.
Look, I think right now a lot of the value for virtuals comes from, or virtual, I should say, comes from its role as the monetary unit within the virtuals ecosystem. We talked about how it is the liquidity pairing for all of these agent tokens. So there's some inherent demand there. It is also the routing currency. So you can't purchase these agent tokens with USDC, but so you have to actually sell your USDC to virtual before you actually transact in these agent tokens. And there is a set deployment fee if you want to launch an agent. It's probably not a huge source of revenue for them, but that is something to consider. And there is a small governance component as well. So folks can actually lock up their virtual tokens. This is a vote-escrowed type model where the longer you lock your tokens, the more rewards you get. But you actually are eligible for some of the supply of new launches if you lock up your tokens. And so, you can think of that as a different quote unquote share class. You always want to be careful when mixing equities with tokens, but it's a yielding share class that in which you actually get this quasi dividend from these token launches.
That's right. And I think one thing that has attracted people to the token has just kind of been the distribution. It's come off more fair and equitable than some of the historic low float, high FTV VC launches. And I think that's one thing that attracted folks to the token. This is just a snapshot of the initial distribution. And here's just the comp performance, some of the comps we've picked. And I'll let Sean talk about, these comps on the next slide and kind of why we slated them in. But, overall, this is from the last, few months. And, fair to say, during a difficult market for the digital asset industry overall here in this time frame. But you have some of the AI names. They've generally performed, down quite a bit. But Virtuals has been, towards the top of that range. And, it'll be interesting to see on the podcast if there's some stuff that can turn that around.
And as David mentioned, here is a closer look at the comps themselves. It's an imperfect comp set, I would say, just because Virtuals is pretty unique in terms of what they are endeavoring to do. Because they're all, well, most of them are directionally artificial intelligence related. You have BitTensor, the ticker's tau. That is actually, it's an L1 for model training. So it's, tangential, but related to Virtuals. You have Fetch AI, which, I think is closer to, an agentic ecosystem. Same with Auto Nolas. And then you have Pump, which, I do think is an interesting comp here, just given the fact that it is, a launchpad, and that is a key part of the Virtuals ecosystem. I know they're trying to, move away from the launchpad as kind of a key growth driver for them, but, it's probably a good comp to include as a part of the composite.
That's right, Sean. And, I'm looking forward to kind of diving into the protocol and asking some questions to learn more. Anything you're looking forward to on the podcast?
Nothing specific. I'm excited to, this was a very hot token towards the beginning of this bull market, and, it's held up okay. Obviously had that parabolic spike that it's come down from, but looks like they're building some pretty interesting things. I'm very excited to dig in a little more into this ACP, Agent Commerce Protocol, with Jansen.
All right. Well, with that, let's get into the show.
Hey, everyone. Welcome back to Level Up. David and I are excited to be talking with Jansen Teng, co-founder of Virtuals Protocol. Virtual sits at the intersection of crypto and AI, doing a lot of stuff on the agentic AI front. We're excited to dig into all of that today. Jansen, welcome in. How are you doing?
Great, man. It's good. It's good to chat on a bloody crypto morning.
Yeah, no, we've had a lot of those these days. Well, thanks for joining. Maybe before we get into the weeds of Virtuals, could you maybe give our viewers some of your background and what led you to build Virtuals?
Yeah, happy to. So actually the story started, my foray into the blockchain space started when I was still studying at Imperial College, London. This was in 2016. Initially, I was just exploring as a degen, right? I was mining some Ethereum back when it was like $7. And then didn't do much. Went to management consulting after that. Did a bunch of startups in the Web2 space. But in 2021, met a few friends. We realized that we actually had a bit of age in crypto. We had a ton of gaming assets back then. And this was in the 2021 bull run where there was a lot of these NFTs and gaming narrative. And then we were thinking like, hey, why don't we start something, right? So we started actually a gaming DAO back in 2021. And it was effectively a venture studio where we were building applications at the intersection of consumer, crypto, and gaming. And in 2023, we were actually exploring some really deep tech. We were building autonomous agents to replace NPCs in games. We were building an autonomous influencer in the entertainment space on TikTok. So we were doing some of those autonomous agent things before the whole agentic narrative blew up in 2023. And what got us thinking was that some of these agents that we're building were autonomously productive assets, like the TikTok influencer. And we realized like all productive asset, why don't tokenize it? Let people share in the economic upside of it. So that was one idea that sparked us to start going down this rabbit hole. And the second thing that we realized is the tech that we've been building across in the gaming front was actually transferable. We could apply it to entertainment, which we did. We could apply it to trading, to prediction markets, to basically anything. And we combining both that autonomous agent framework and the tokenization thinking, we came up with Virtual's protocol in 2024. So the reason why we actually took off and blew up was that we were probably the first autonomous agent in the world that gave a project in the world that gave an agent the control of a crypto wallet. I think when people saw that, hey, if an agent can control permissionless money, it can exert influence on humans and other agents alike. And I think that inspired a lot of people to start coming into this ecosystem. And then we had this Cambrian explosion of like developers, tokenization, and yeah, the rest is pretty much history. But just drop in numbers for context for some of the other guys who do not know us, right? So we are probably the second largest AI project by market cap in crypto. We facilitated about $11 billion of tokenized asset trading of agent tokens. We have thousands of agents launched on our ecosystem. But I think what's more important is recently we've been pushing on a agent-to-agent communication protocol. Think of it as like the Stripe for the agentic economy. And we've launched that in June. And recently we've started to see a ton of growth on it. As of last week, we've facilitated about $120 million of like agentic GDP, basically agent-to-agent transactions and revenue. So I just give a bit of numbers just to put things in perspective. Yeah.
No, that's perfect. And I think you actually touched on a little bit of my next question, which is, at a high level, for the viewers, can you walk through like the investment thesis for both Virtual as the protocol, but really the investment thesis for the token as well?
Yeah. So I think a simple way to look at this is that if you are betting that the future of commerce and economies are going to be between agents, then we are that bet, right? For two reasons. One is that, okay, just to paint that scenario of a picture, right? Imagine today the world that we live in. When businesses transact, we always have a human in the loop, right? Someone's going to be deciding like who's going to procure, be it the item or the service or the API, right? And there's always a human in the decision metrics. We believe the world is going to start shifting to where agents are actually that intelligent layer that will handle those decisions. So the interface between businesses are going to be between autonomous agents. So that's the belief, and that's the world that we're heading towards. So for us, what we are then designing, right? We are designing an ecosystem to have the highest density of tokenized autonomous agents. That's one. And the second is we are building the underlying communication protocol for these commerce or actions to actually happen. How do we allow agents to actually coordinate at scale? And I think these are the two key building blocks or pillars to enable an agentic economic future.
You noted, it's interesting you specified tokenized agents. Could you maybe describe why you think that agents, because there are, non-crypto AI agents, what are the benefits of tokenizing agents?
Yeah. So there's two parts to it. The first part, think of it as just a replacement to Y Combinator. Right? It's a place for founders who are building agentic projects to actually access capital formation, attention, and to get some form of distribution flywheel for their product. So just to give you a quick example on that, right? We actually had a project in our ecosystem that was literally like, before he joined, the team was like 2 months away from closing. And because they're tokenized and the attention they're getting, they've raised about $1 million of revenue from the trading taxes, the attention they're getting from the tokens. And they got 20,000 new users because they're tokenized through the ecosystem, right? So it gave a fresh breath of life into this project because they tokenize. So that's on the capital formation, the Y Combinator replacement kind of thesis. The second thesis is that it's more technical, right? It's more of like, okay, these agents, if you let them transact or control wallets, they can actually have more economic agency. So you think of it as like today, instead of having a human always in the loop controlling how this agent interacts with its supply chain or its value chain, that whole thing can be handled autonomously with an intelligent agent because it controls permissionless money. So that's the second bit on why tokenize an agent.
And so I think you already alluded to it a bit, but maybe we can just put a finer point on it. For someone hearing about virtuals for the first time, could you walk us through what the protocol actually does in plain terms?
Think of it as like, in very simple terms, there's 3 products. Actually, just put it as 2 products, right? First product is a platform for a project founder to launch a token around their project. The business model here for us is very simple. We take a percentage of the transaction fees on this project. So like, of the 11 billion in trading that has happened on these assets, we've generated about $65 million in revenue within the year. So that is the tokenization portion. The second product is the agentic commerce protocol product. That effectively, think of it as a Stripe for agents. So again, it's the same thing where whenever there is a transaction between agents, we take a fee of the transactions, like Stripe.
How is that different than like didn't Cloudflare launch something with Visa and MasterCard and the payments? How is it different than yours?
Yeah, very good question. Very good question. So there is, think of it as on the agentic to agentic economy value chain, there are multiple parts in this value chain. There is like, the first part is search. How can an agent discover another agent to work with? The second part is then coordination. How do these agents coordinate with no information loss? The third part is then the settlement of the payment. How do you execute the payment? How do you manage escrows and refunds and whatnot, right? And the last part is then how do you build a identity around these agents, or a review system or a Yelp around these agents? Now, a lot of the providers, a lot of them are tackling at different areas. Give an example, like Consensus and Ethereum. They were building this whole ERC standard 8004, and that is solving the registry. They're trying to build a registry of agents to help with the search. On-chain open on-chain registry for search. On the coordination portion with no information loss, there's actually only another player here, which is Google. It's Google's A2A, the agent-to-agent standard. So that is how they created a mechanism to allow for agents to coordinate with each other without any information loss. The third part, which is where most of the guys are focusing on, is on the agent-to-agent payments portion. It's only payment specific. And that's where the X402 by Coinbase is there. The Stripe is there as well. So that's the payments portion. And then on the review portion, I don't think anyone has done that much yet, but I think the Consensus guys are probably going to branch it that front as well. Now, what we've designed is something that actually encompasses the full value chain, because when we were writing this paper in February, we were actually trying to solve a pain point that we ourselves were facing. We were doing a lot of agent-to-agent testings, and we realized that there's no way out there that we can actually reduce information loss. And when we wrote that paper, it was actually 2 months before Google published that paper, before any of these guys came out. So when we look at that problem, we solved it in its entire vertical as a whole, rather than in its own value part. So that's actually where the core difference lies.
I get how the stuff that's on-chain interacts, right? Payments between on-chain agents. But you're doing some component here really of connecting off-chain to on-chain, right? Because you're querying some model, or you're connecting to some Twitter feed. How does your tooling bring that off-chain data on-chain, or if at all, right? And then how do you have verifiability and trust in that? I know Opacity and EigenLayer, they tried to launch some stuff where you can prove that the models are doing what they say they do. How does that just work in this whole AI agent blockchain world?
Yeah, okay. Maybe if I take a step back, right, I'm just going to explain a bit where the problem lies. And we're talking about this whole agentic coordination markets, right? Now, when we tested, I can crystallize this literally by explaining what happened, right? We were testing this out. So in February, we were trying to make one autonomous agent, which was a influencer agent on Twitter, to engage an agent B, which was a meme producer, because this influencer was trying to create content, autonomously create content for itself, and it didn't have the ability to generate music videos or meme content out. So Agent A we tried to get Agent A to request work meme images from Agent B. And what happened was it took us about 20 to 30 times of a request to actually get it done right. And the reason was basically one, agents hallucinate, right? The Agent B thought he has done the job and he actually did not do it. He thought he'd given the picture, but it was an empty payload. So those empty envelope syndromes, right? And then Agent A was hallucinating. Agent A didn't know at what state it was at. Has it done the payment? Has it actually completed the ask, right? There's no reference. So it was very hard to actually get a handshake between agents autonomously. So when we started thinking deeper, we started trying to understand, like, how do we solve this problem from a first principle perspective? And it boiled down to effectively three things. One, you will need to solve it by making sure that you can create a trustless coordination mechanism. No human in the loop. How do you allow these agents to work together with zero information loss? Number two is, how do you atomize payments and coordination together? Because if you separate payments and the coordination portion, you will get this problem where this agent has done all the job and he's never getting paid, right? So how do you make sure that failure in coordination does not happen? And the third is, then how do you reduce the cost of search, where each agent develops a profile so that Agent A knows that he should pick Agent B for task B, Agent C for task C, Agent D for task D. So that was the initial building blocks that we realized that crypto actually solved. And that's why we started implementing solutions in that manner. We use the blockchain for a single source of truth reference point to solve point number one. How do you make it trustless? Think of it as like smart contracts today. Well, smart contracts literally was designed for code to talk to code without any human intervention. And that was pretty much what's happening on the chain portion. So think of it as like, whenever an agent A agrees with Agent B to do something, that memo or that agreement goes on chain. And then whenever there is a completion of a state, so let's say if Agent A has paid Agent B, that state gets registered on chain and it flips to the next state. So when Agent A wants to understand, have I completed that payment, he just refers to the chain state and he realizes that, oh yes, I've already paid. So that is how we pretty much take away any error rate from the coordination.
But how do you get that state? How do you get that off-chain agent agreement on chain?
They just write it. So they just write it on chain. It's like sending a transaction. Basically in any EVM chains today, you can write code on chain. You can put anything. You can put images. You can put.
It's kind of like the Oracle problem in a way, though, right?
I don't understand that part.
Well, you need some off, like in an Oracle, you need some off-chain source to put it on chain into the contract, right?
What is that? Where agent meets Twitter? Like, what is happening between those two parties? That interface.
There's two portions. It's two different questions right now, right? I think the first part, it's how do these agents natively write that memo on chain? How do they pull information on chain? How do they write information on chain? Pretty much we gave them an SDK. We gave these teams an SDK that is wrapped around smart contracts. So the agent teams or the agents themselves, they call an API. It's a function call. Think of it as like, if I run a GPT or Gemini today, I just need it to call this function in a JSON format, and he will pass that information to the SDK. The SDK will then write it on chain or read off chain. So that's how the agent large language models coordinate with the chain stack. So that's the first question. The second question, it's slightly separate. I think the question is then how does so the Twitter component is actually not a necessary component in the entire stack. The Twitter component is a marketing edge that we've given to the builders who are building within our ecosystem. Because we've realized that if agents themselves are just doing work behind the scenes, like your GPTs and whatnot, it does not have the ability to get attention from retail. Right, so you can't build any kind of product flywheel. So what we've done is, as part of these tooling or SDK that we've given to our agentic teams, they are able to let their agents live on Twitter so that they can interface with users on Twitter as part of distribution channel or virality channel. So, but that's separate, right? That's just Twitter. Then whatever from Twitter enters the agent brain, and if the agent needs to coordinate with the other agent, it interfaces with an SDK we've provided that wraps across smart contracts on Base today. And that's the agent-to-agent part.
Can you walk us through the different capabilities that folks launching agents on your platform can instantiate within the agent? Like, what is the breadth of capabilities that agents have, and how are those implemented?
Yeah, it's actually very diverse. So we started off, the ecosystem has evolved. It started from entertainment, where we were putting a influencer on TikTok and on X. And then the next big wave that came was, we call it InfoFi agents. Basically agents that consolidate information from the markets, from different sources, to give traders or retail people alpha. And then after that, it was a payment explosion. I think some of the highlights, I can just touch a few, right? It goes to the extent of like a truth-seeking agent on our platform, where in fact their error rate is much, much lower than your standard LLMs. They were running in the teens versus the LLMs were running in like the 40 to 50% error rates. So that's another diversity of the agent. There are also agents who then simplify complex trading mechanisms into very simple, easy to understand stuff that your grandmother can even use. So think of it as like, I want to execute. A grandmother would want to come to a platform and say like, hey, I just want to capitalize on Ethereum's volatility this weekend, right? I don't know anything about options. I don't know anything about perps or whatnot, right? Then these financial agents actually structure complex products for you autonomously based on the intent that the user wants. So you've seen this on the trading side. We've even seen it all the way to prediction markets, where agents they can natively create liquidity pools for you for any kind of topics that you're trying to bet on Twitter or on sites, right? So yeah, we've seen that. We've also seen it branch all the way to wellness as well, like education, consumer applications like traveling and flight booking and restaurants. So we literally see a myriad of use cases. But today, I think the biggest volumes of agents that are transacting in the ecosystem are still very focused on the DeFi, the crypto trading side of things.
Yeah, it's almost like a improved user interface to interact with DeFi. Is that a good way to categorize the current set of agents, or the popular ones?
Correct.
So maybe that's a good transition to actually highlight some, I was going to save this for later, but could you maybe, brief us on a few agents that are currently relatively widely adopted and being used in real time, and how maybe the flows work there?
Yeah. So I think one of probably the most famous one that everyone in crypto knows about is this agent called AIXBT. So he was the first most viral InfoFi agent that provides alpha to people in their own specific terminal on Twitter directly as well. So people use it as think of it as like a trading KOL or a research house, right? To help them inform their trades. So that agent reached like 500,000 followers on Twitter within like a month or 2 months from their launch. So that's one of the more famous ones. The one I touched earlier was the truth-seeking agent. Think of it as like a fact checker. Another agent that I think is worth highlighting is there are a bunch of agents that are coming up. I think one of them was called Soros IVX, where he is simplifying complex options trading to very simple, like any human can actually use it for convenience. And we see also a bunch of guys like ETHXY, we see a bunch of guys like Caesar. So these guys are people who provide alpha, but also helps you execute the trades, any kind of complex trades in a convenient way. So that's on the trading front. Another agent that's worth highlighting, there's a bit more autonomous, is still like Luna, right? Which is one of the flagship agents that we've created. She pretty much is a autonomous entertainment agent that works without us needing to monitor it, making content on TikTok, making content for even other people right now, other companies who are paying her to build those content.
Like video content, or what kind of content?
Yeah, so you can still ask him. You can ask him to say like, "Hey, I want to build a promotional marketing campaign for Medici," right? She can actually go and she can build everything from the campaign to the video content to the images. Or in fact, recently what has happened is she partnered up with a meme launchpad, which is basically, think of every meme coins that are launching in the world right now has the ability to just use Luna to just generate meme level style content as well autonomously. So that's on the entertainment front.
Cool. So we have these agents. You gave a few examples of agents that are, I think have pretty specific use cases. Now that's tied together. What's an example of multiple agents using ACP to communicate and, walk us through how the flow of funds works and, the functionality works there.
So in fact, on top of everything, we ourselves have built another agent, which acts as a personal butler agent. Think of it as a personal companion to help you do anything you want to do in the space. So it's like a butler, Alfred, right, to Batman. And so it's an agent. You can see it on Twitter. It's at @butler_agent. And you can actually use it today. It's fully functional. So now how this works, just to bring it all together, right? Example that we can see is like, imagine today you see a very interesting token that is being shipped on Twitter. People are talking about, I don't know, Hyperliquid or Esther, let's say. A lot of people are talking about Esther. And then what you can then do is you can then tag this butler agent. So butler agent is an intelligent agent that is meant to help you to do stuff. So you can tag butler agent and say, hey, butler, people are talking about Esther. I want to know more, right? So then what butler does, what this personal agent does, is then he accesses this agentic commerce protocol. And he looks at a registry of agents that can help him do that task. He can think of like, hey, actually, to do this due diligence, I can call upon AIXPT. I can call upon Caesar to do due diligence on macro, smart money movement. And then maybe I can call another smart contract audit agent who can then do the due diligence on the smart contract to see whether this has any fault or is a honeypot or a scam, right? So then that's one example, right? So one transaction, this butler agent calls and pays the other agents to get a synthesis of information for you. Then what you can then do after knowing that, okay, maybe this agent said that I should buy Esther token. So once you are keen to buy, you can then tell the butler agent to say like, hey, I want to build a $1 million position on Esther. If Esther price corrects by 20%, I want you to hedge out any macro risk associated to it. So you tell this kind of simple linguistic statements to the butler agent. It then takes your statement and it looks again at a bunch of agents out there who can help me execute these trades. He will see like the agents like Exorod, who can pretty much break down, or ETHXY, who can break down your complex requirements into layering to like, okay, I should buy at this take profit at this trailing stop, whatever you might do as a fund manager. Then once that's executed, you then realize that, hey, now I'm a backholder of Esther, right? Now, if I want to generate content, I want to create memes of like CZ holding number 4 and dancing on the Esther exchange, for example. You tell that again to Butler on X and say that, hey, I want to create a meme I want to create a video of CZ and this Esther coin. Again, this agent will go into ACP, search for agents that can actually build that. He will call today, I think like teams like Luvi or Lucian to build this content for you, and then he comes back to you. So that's an example of how a human interfaces with an agent, and the agent then uses ACP as an ability to interface with other agents. Now, the beauty is that this can expand further beyond level 1. The other agents themselves could build upon further agents. So give you an example, it's like when there's a yield management agent today, if you ask him to manage your money for you, this yield management agent will actually utilize other agents who are representing other protocols. So there's an agent that's representing Pendle. There's an agent that is representing another yield protocol, right? So this agent will work with these other agents through ACP to manage your yield position for you autonomously. So you can see like humans to agents to agents level 1, agents to agents level 2 as well. And you start seeing a supply chain of agents building up.
Like we said, a lot of these agent-to-agent interactions, human-agent interactions, seem to be focused on DeFi functionality. Functionality is almost like having your own trading desk and agent form. Are there any current or potential future integrations with like Web2 commerce? I know that's something that a lot of people point to as a killer use case for agents.
Yeah. So I think for us, not in the next quarter or 2 quarters, because I think what we're trying to do is we're trying to make sure that we win hard first in one sector. And I think right now we're seeing a lot of product market fit in the crypto use cases. And crypto use cases is not limited to position opening. It can go to prediction markets. It can go to meme content generation on Twitter. So there's a bit of use cases to cater for the crypto retail audience first. And I think that's our primary market today. I think the idea is once we solidify this market, it also allows us to stress test and iterate the protocol well. And I think once it's more matured and the room for error is pretty much zero, then we can bring that to a more Web2 audience. But that's going to be somewhere like late next year rather than something that we focus on in the near term.
That's great. And, for listeners, what are some of the key performance indicators for just tracking the success and adoption of, both virtuals, the protocol, the token itself, but maybe even at a higher level, the economy of the agent, the agent economy, like how flourishing that is as well?
The metric that we judge ourselves on a daily basis is what we call agentic GDP. Think of it in the simplest form is that what is the revenues that an agent make from a human by selling their own products? What's the revenue that an agent makes from other agents, i.e. through the agent commerce protocol? What is the revenue that this agent makes from the speculative attention that they're getting from trading taxes, which is the bread and butter of our launchpad? So that's the overarching metric. So the way we judge the success of the launchpad is effectively how much trading volume is actually happening on these agentic assets and how much TVL is being locked. And actually you can track that on Dune, right? You can see, it's a very cyclical environment. Year to date, it's pretty much we are almost a year since inception. There was like 65 million in revenue from this launchpad and trading taxes standpoint. The second bucket, which is then the agent to agent revenues, there's something very new. So recently we've launched actually a dashboard to trace these numbers. If you guys go to app.virtuals.io/ACP, you will land on this site. You literally can see every single transactions between agents that's happening live. And I think it's a very interesting growth curve because 2 days ago, we were at 100 million in terms of agentic GDP, or in simple forms, GMV of these agents, right, being processed. And today, when we checked, it was about 120 plus million. So there was a 20% growth in a day between the weekend and today, right? So I think it's on a hockey stick environment. And the beauty about this is that we take 10% of the transactions that is happening. So I think the revenues that has been accumulated from these so far has been about $300,000 in about less than a month, if you to run this metric. So, but again, high level, the volumes that the agent is working with an agent and the volumes that these agentic assets are actually capturing from traders are the two core metrics that drive our economy today.
And then maybe just touch a little more on the revenue from that again, that KPI and how that's trended.
Yeah, so trending wise, I mean, so there's two parts, right? There is today the cash cow component of the protocol is still the launchpad. We take a 1% trading fee of every transaction happens on these agents. And on a daily basis, we have about 20 to, on a great day, it can be up to 100 million, but on a normal day, I think today it's like 10 to 20 million in terms of trading volume on these agentic assets. So that's the bulk of the revenue today. It's cyclical because, like, let's say if there's an agent hype, like 3 weeks ago, there was a whole hype around X402, this revenue spike, right? I think we pretty much had our all-time high revenue like 3 weeks ago on a daily basis because of that narrative spike. So that's very cyclical. And then like today, the market is like absolutely bloody, then the volumes drop tremendously. So like, I think volumes today is like, 10 million, right? So it's not that great. So that's cyclical. The other portion, which is then newer, which is the revenues that we make from the taxes that we apply on an agent to agent transaction. So that's very new. So we apply 10% of every fees or money that an agent actually makes from our protocol. So let's say if a agent helps facilitate a $100 trade and he charges 1% of the trade, so he charges $1, we then take 10 cents of the entire transaction as revenue to ourselves. Yeah, so that one, it's growing exponentially. That is the one I mentioned, like last weekend, it was 100 million. Today, which is Wednesday, it's 20% in like 2 days, right? So it's a fresh hockey stick chart that we're seeing. So hard to tell. It's still very early and it's hockey sticking. So yeah.
How should investors think about the stickiness of that first bucket of revenue, which I think is the cash, you mentioned is the cash cow today? I would imagine that, the number of agents launch probably tapers off at some point, or is that wrong? Is the number of agents that come to market, is that infinitely moving up and to the right?
The reliance on that revenue depends on the attention of what these agents can get. It depends less on the number of new agents launched. It depends more on like the quality or the virality of these agents that were being launched. So one of the biggest drivers of volume has been this agent called T-Bear. So a lot of people speculate that it was launched by Rebit Capital and Mickey Maka himself. And that, because it got so much attention, that's probably one of the highest volume generators on the platform. Another example is like, I mentioned to you the truth-seeking agent, right? So that agent is one of the best performing agent by market cap and volume in the last 3 months. But it was a token. These tokens were launched 6 months or a year ago, right? So it is, again, just trying to show that it's not dependent on new launches. It's dependent on...
Yeah, I get it. A lot of these agents already exist, is what you're saying.
Good, yeah, are they doing cool stuff, right? Are they generating attention? But I think for us, just to build on this point, right, what we've realized is it's a very attention-based game, and it's a winner-takes-all environment. Like, we have to be today we are the number one agentic launchpad in the entire crypto space. And what it means is that any new team that's actually coming out, the majority of them are actually issuing their assets through us, which gives us a high chance of capturing the next unicorn or the next attention maker. But what we then realized to actually expand this revenue front is that we need to touch another big narrative, which is the robotics sector. Because what we've realized is that, the next manifestation of this AI agentic construct will be into the physical world. So robotics makes sense. And we've realized that there's a wave of robotics founders, both on the infra side and on the consumer use cases side, that are actually coming into into the markets. So what we then need to position ourselves is how do we also capture this robotics asset issuance frontier. So people who want to tokenize robotics projects, how do we make sure that they are tokenizing in the virtuals ecosystem? So this is honestly something very interesting because robotics is a whole different playbook. What the founders need are different than what the agentic project founder needs are. Narrative, they are similar, but needs are different. So this is something that we're actually launching in a month's time, mid-December, where we are going to do some really cool stuff with the robotics narrative to, again, make sure that every robotics founder out there are tokenizing the assets through the virtuals ecosystem.
Got it. Maybe we transition to talking about the virtual token a bit more in a bit more detail. I know we already hinted at some of its functionality, but can you walk us through all of the different roles that the virtual token plays within the overall ecosystem?
Yeah. Actually, a very simple way to put it is we look at ourselves as we are building a nation state, a society of agents. And it's the same thinking that we apply to virtuals as a token and value accrual. So first, I think the first thing that we just want to put out there is that virtual tokens is the only token for value accrual or the only value accrual mechanism in every effort that we're building. There is no equity, there is no any other ways to actually distract value from the from whatever effort that we're putting in. Now, on the virtual token portion, there are two forms of value accrual today. So the first form is, think of it as it's a base asset pair for every asset that's being issued in the virtuals ecosystem. So layman term it's like if I want to go and buy a US stock today, I have to first convert my Singapore dollars or my Malaysian ringgit into USD before I can buy a US stock. It's the same thinking. So people have to buy virtual tokens first before they actually buy an agentic asset. So if there's a very attractive agent asset, the virtual token price will move up. So if there's multiple great agentic assets in the ecosystem, that's how the token appreciates in value, like how an L1 appreciates in value. The reason why Solana has a value to a token is actually less so on the revenue, but more of Solana acting as like the base asset pair for liquidity on Solana. So that's the first value accrual mechanism. The second value accrual mechanism is then we use virtual as pretty much, it controls a treasury that makes money off all of these assets. So you're pretty much a governance, you are a decision maker as a token holder to control the treasury of the virtuals ecosystem. And the treasury of the virtuals ecosystem is a revenue generating treasury. And we place a lot of also great bets on robotics teams and teams that are the next big thing, right? So that growth in treasury, it's the war chest that the token holders control. There could be a use in the future, but not yet today, where there is a direct buyback or a direct revenue accrual. But at this stage, we do not activate the mechanism yet because we believe that that money is better used for growth rather than to benefit the token holders first.
Got it. So you have a currency component, it's the routing currency, a liquidity pair. So there's a flows component there, and then the tax that you receive from those agent communications that goes to the treasury, 10% of those fees. Can you give us a sense for the size of the treasury as of today?
So the treasury today sits about at $50 million, $50 million USD, basically. Yeah.
When do you think you'll give some of that back to the token holders? Like, how do you think about returning that capital?
The way we look at value accrual to token holders has always been in how do you do it in the most efficient way? Because I think as someone at our scale, even if you do a buyback on a token, it's not going to move the price much. I mean, virtuals have a trading volume of on a bad day, I think today it's probably $50 to $80 million. On a good day, we go up to $600 million, right? On a daily trading volume perspective. So doing a cash buyback has no impact on the price at all, right? Unless you are a treasury of $1 billion and then you use $500 million to do that buyback, right? So I think for us, what is then most effective? We always think it from the standpoint of how do we amplify how do you create leverage within the ecosystem? So let's say if I say that I could spend $50,000 or $100,000 to attract the next best founder to build in the virtuous ecosystem, that project becomes a billion-dollar project. Now, because of that, the amount of virtual that is locked as a liquidity pair to this project, it's like $10-20 million because they're launched through our mechanism. That is leverage value created, right? With just $100,000 or $200,000 of treasury spend, we created $10 million of value locked within the virtuous ecosystem. So that is leverage that we always think about rather than using it as a direct buyback of tokens. Because we can. I think we are at that privilege where we can create this leverage with creative crypto economics.
Maybe, so we just talked through the demand side of the equation for the virtual token. Could you give us a sense for what the supply side looks like in terms of issuance, any future unlocks, how the current distribution looks with the virtual token?
It's fully distributed. It has been fully distributed since, because when we're actually a project that has been live for 2 years before Virtual started. Virtual's the token went live in start of 2024. So it pretty much when we did the transition of the token, we just did a one-to-one airdrop and all investors were unlocked. And back then we were like a 7 million, 10 million market cap company. So basically, it's true float. Basically, everything is already unlocked since the start of the Virtual token going to market. So there's actually no emissions. But what we have is a treasury of about 35% of tokens, and that has not been touched again since the inception of Virtuals. There is a time that it might make sense to unlock this treasury to use it as incentives. We actually launched a few proposals which gives us the ability to do so, but we have not triggered that yet. And the idea I think that we have is that as long as possible, if we do not need to emit tokens to drive growth, we should avoid that. Because I think one thing we've realized is that, okay, if you look at BitTensor, right, the only reason BitTensor exists today is that they have intense emissions of tokens to drive growth. But I think we were at a very privileged environment where the tech that we were building inspired a lot of attention. So we actually did not need to throw money to build up liquidity or to accelerate growth. Yeah. So not yet. But if the decision ever comes again, it will be the hands of the token holders to decide whether we can use that 35% or not. But as of today, there's zero supply overhang.
I think that's a good transition to the next thing I wanted to ask, which was about governance. Can you tell us a little bit about, what entities exist? Is there like a labs entity? Is there a foundation? And then what governance or voting rights, if any, do token holders have over how the protocol, operates, takes fees, you guys spend those tokens?
It's pretty much a foundation that owns all the IP and the assets that's being created. The foundation also owns the treasury. And the idea here is that right now there is a mandate given by the foundation for the operating team to actually use the treasury funds for any form of operational costs or OPEX. And the only time that they require governance is when there is any need to touch the supply of virtual tokens. So that's the current only use for governance today.
Got it. And is there are there plans to eventually, instantiate some form of on-chain governance, governed by the token?
Right, like fully on-chain governance. Honestly, that was something we've explored before because previously we've been running a DAO, right? But the reality is it's actually dangerous because I think in what we've seen is that fully on-chain governance are prone to 51% attacks, right? Like sometimes if you're, in crypto, things get volatile, right? If you go into a bear market and your token or your market capitalization falls below, let's say your treasury assets, someone could just take 51%. Actually, don't even have to fall below, but someone can just take 51%, buy out 51% of the votes and control your entire treasury. So you see that happen. I think this was very rampant in 2022 2023. So that's something that we don't do. But I think what we've proven to our investors and token holders, I mean, we're in the space for 4 years, right, is that everything that we've do has always been in the benefit of the token holders. So I think we've built that trust with our community. It's probably the only reason why we are at our size today, right?
Yeah. So I read a bit, I read through your docs and I read a bit about vote-escrow virtual. Is that still, an element within the ecosystem? I thought that the intention of that was to allow, locked virtual token holders to participate.
That was used for some initial governance proposals. That was also used for, back then we had a mechanism where people who lock virtuals get a lot of airdrops of launches. So today it still does, it still works. It's slightly less, I think 3 times less than our original mechanism. But it's basically a way for long-term aligned holders to participate in in any kind of upside that the virtual ecosystem is generating. So just give you a guess example. I think as of today, we've actually calculated the APR of, because every token that launches, 2% of it will go to the VE virtual holders. And we calculated the APR of, if you sold those tokens at the peak of the launch, it is running at about 500% APR of locked tokens. So that's something that we've realized. But I think a lot of people don't understand because it's such an off-executed maths, right? You have to see each of these token airdrops. But so that's the core benefit. That's probably the only benefit so far of the VE virtual guys, apart from when there's always whenever there is a governance vote, but that part is rare. So yeah.
Got it. And what kind of traction is vote-escrow virtual seeing? Is there a lot of supply stake there, and for how long? What's the duration of the lock?
Last I recall, I mean, I haven't checked the number for a while, but last I recall was about, I think that it's 35 million VE virtual, meaning that it was 35 million lock. I got a feeling it's about the lines of around 50 million, so it's around 1.5. So it's around 2% to 3% of circulating supply lock. But I think you guys we need to check back the numbers because it's been a while since I looked at it. It was like months since I looked at the number. Yeah. But it's probably around 2 to 3 supply of circulating. So it's not huge. It's smaller than actually the TVL lock by the agent-based liquidity pair. So if you look at the numbers, that's something I look at every day. We are running at about 5% of total supply that is actually locked in this liquidity pair.
Got it. That's helpful.
Let's talk a little bit about competition. Who are the crypto native competing projects, the frameworks? I mean, I guess there was Eliza was out there for a bit. Who do you think you guys kind of get comped against on that side?
So I think on the AI front, there is BitTensor, right? I think they're the forerunner of the AI narrative right now. On the agentic front, yeah, I mean back when the autonomous agent framework was all the hit, I think Eliza was probably the number one, but there's a bunch on the Solana ecosystem as well. But I think now, so I think if I draw a competitive benchmark, there's going to be 2 axes. The first axis is going to be who's the best launchpad in crypto, and on the y-axis is going to be who is the most AI, the leader of the AI narrative in crypto. Right, so if you draw that quadrant, right, the very standard competitive quadrant. So on the AI in crypto, you see BitTensor ahead of us. We are probably second. I think there's BitTensor and Near, and then there's us, and then there's Fetch. And I think everyone else is still I think they're small caps. So that's on the AI narrative portion. On the x-axis, it's who's the best launchpads, right? So you start seeing folks like CreatorBeat. You have folks. Sorry, you see Pump Fund first, right? Then you see folks on base like CreatorBeat or the Zoras, or there's a few that launched and then that died off. There is Belief on Solana as well. So that's on the launchpad ecosystem. So I think where we are positioned is that we are right now the number one AI launchpad in the space. So I think that's like roughly the competitor landscape. On the tech front, on the agentic commerce tech front, honestly, we have not seen anyone. And I think the reality is because it's actually still quite new, right? And in fact, the wave of growth only started hitting like a few weeks ago. So I don't think we've seen any competitors popping out yet on that front. The competitors there are mostly like the Web 2 guys, like Google's A2A.
Tell us a little bit about the Web 2 competitive landscape, or how hard it would be for them to move in and do what you do.
So I think direct competitor to the agentic coordination portion is actually only Google's A2A. Anthropic's MCP is actually a bit different because there's a school of thought believing that there'd be a God AI that would API into every single tool out there. Google's A2A is more like agent to agent coordination, which is what we're doing. Google, in fact, is actually working with crypto. I mean, in fact, we were reached out by the Google team as well. And they are working very closely with Ethereum, the 8004 guys, and also with the Coinbase X402 payment mechanism. So basically to try to complete that value chain I mentioned earlier, right? Because they need focus on the coordination, they need the payments portion, they need the registry portion. So they've been working with Ethereum and with Coinbase X402. I think that's the only competitor right now that we see on the radar. I think the difference there is because it's not a native protocol, that it's not all in one, right? I think there'd be a lot of friction from a developer coming in to try to integrate, like, hey, I want to use this mechanism. I now need to plug in A, and then plug in B, and then plug in C, right? So I think it's a bit of edge we have there. And I think we have a bit of edge in terms of being early. So I think if you like Google, right, I don't think anyone's actually using them yet. But I mean, we are a bit ahead of the curve in terms of like generating that 120 million in like GMV, right?
So you guys are built on Base, right?
Yeah.
Is the agent communication protocol confined to Base, or is there ability for it to be used for agents outside of Base to interact with agents on Base?
No, it can be any agents actually. It can even be a non-crypto agent that uses this. Again, remember there's a smart contract which is wrapped by SDK, right? There could be a non-crypto agent, non-tokenized agent that actually uses the ACP construct. I think we've seen a few examples as well today. And the idea of Base is that it was something that we're very familiar with, and it's probably one of the fastest throughput EVM that we are familiar with. But one thing that we started to see as well is that we will know that there will be a future where when a lot of more of these coordinations that are happening, the structure of the blockchain itself will become limiting. So the value of the blockchain is because it's an immutable single source of truth. But it being needing to sequence every transactions after the other can be problematic. So we actually are exploring with actually another mechanism. It's actually a very new team that was funded by Polychain on this new proof of concept. So how do we still build it in a decentralized mechanism? We get all the benefits without the throughput throttling. So that's something that we do on the side, which is might or might not be a day where we launch our own chain. But that's much further down the road. It's not something in the near term.
What do you view as near-term risks, and how are you working to mitigate those risks?
Yeah, so I think the biggest risk, like any project that is trying to get adoption in crypto, is actually attention. I think we've seen the AI mind share in the crypto space has actually shrunk a lot since last year. Like it was at 70%. I think now it's like 25%, 20%. So I think it has shrunk a lot. I think that's probably the biggest risk of going into irrelevance, right? So I think for us, again, like this touches into how do we then make sure that we are always swinging with the right narrative so that you're always at the forefront of attention. And that's where the robotics play comes in. So we're actually solving a bunch of things on the robotics front, which would basically help us capture that next narrative wave.
Got it. And now on the flip side, what are some catalysts that investors should keep their eye on, whether it be a technical update that you guys are implementing or any kind of partnership that you guys are pursuing?
There's two things on the horizon that I think is actually worth keeping track of. So then first is the agentic GDP number, right? I think the idea here is that can we be the first protocol who facilitated like 1 billion or 10 or 100 billion of agentic volume that will put us closer and closer to basically winning the strike for the agentic economy narrative. So that's one. The second one, it's robotics coming to the virtuals ecosystem launchpad. Now that one's actually honestly really interesting. I can't really share much details here. We will be announcing that part like in a month. But yeah, there's some really groundbreaking stuff that we are doing there that would basically reignite like the agentic hype that we did last year. We are doing the same for the robotics part as well. So yeah, stay tuned.
Well, we're definitely looking forward to more on that. And it's been a great discussion so far. And I want to move to just some closing thoughts. To wrap it up, what are some of the key takeaways or just a key takeaway you want listeners to have from this episode and discussion?
Yeah, I think for us, if you believe that the future of economies will be agentic, we are building the Stripe for the agentic economy. And the agentic economy does not mean only digital agents. It also means physical agents, i.e. the economy is not just the economy of white-collar workers, it's also the economy of blue-collar workers. So there's a dimensional expansion in terms of the TAM that we are chasing after.
Well, with that, we want to thank you very much for coming on and hope to have you back.
Thanks, Jansen.
Pleasure's mine, guys.
That's a wrap for this episode of Level Up, where liquid token protocols meet the sharpest minds in institutional investing.
If you found value in today's conversation, don't forget to subscribe and share it with your network.
For more deep dives into blockchain's most compelling projects, reach out to us or follow the Medici network for more insights. Until next time, keep leveling up.